supply and demand. It's actually complexly simple, you know. So I would put it like this. Okay. So let's say, and I'm even going to use a move here to illustrate this. And I think this one is a good one. I'm going to take a guess and say this one is right here. So I have this fib tool, which is the fib retracement tool set up in TradingView, but I have it set up as a, you know, a 0 point, a 1 point, and then the middle, a 0.5 point, and then the 0.25 and the 0.75 point. And referring to other videos and things that I've talked about before, you'd understand why I have it marked in that way. So if I grab my fib tool and we had this move up and then we had this move down and then we had this move up. Okay, so let's just say that I'm right here and we're in this move down, and I want to know, like, where are the likely places that this move down is going to stop, right? I mean, there's a lot of good places, even without using this tool or, you know, knowing much of anything. You're like, oh, okay, well, there's a lot of things happening in here. So, you know, yeah, okay, all right, great. But like where, right? Same thing in here, and then the same thing in here. Now, another thing in which we can do that I do is I will grab my fib tool with those settings that I've mentioned. Just clicked that on the wrong one, but let me put it on that one. And then I'm going to pull it up to the high. So we're using swing highs to swing lows. And it doesn't have to be exactly perfect, but as tight as you can get it. So now we see this is the move up. And then from this point right here, when it comes down, like, look where it stops right now. Where is it at right now? Boom. Right around that 0.5. It's 50% of the way from the move that created that high. Okay. Now, if we look back in time on this time frame, we see that this is a swing high and it even closed above these others, right? So what that means is before this was created, this was a weak high. Okay. And this is a strong low because this did its job. This low created a high and it broke that one. Okay. That makes us strong. So think about it as like somebody doing their job and they get like an award or whatever, and they're really proud or whatnot. So now they're strong, right? They have a good footing in whatever it is that they're doing. So now it's got to pull back. Like that's just an inevitability. And this is where most people get kind of caught up and trapped in moves. And this is where the term FOMO kind of comes in, is we all see these big moves like right here. You know, we see these big moves and we're like, oh man, it's really moving up, right? Like it's going to the moon. It's going to 290,000, like everybody was saying before, at the previous all-time high. But one thing we have to remember is that when it breaks structure, you know, and it can be in the same direction as that we've been going, right? You know, in the past, the recent past, it still has to pull back. It has to. It cannot indefinitely just go up. You know, depending upon the time frame, of course, but more times than not, it's not going to go up forever. Otherwise, you know, Bitcoin and every other asset would look like this, meow, or meow. You know, that's just what they would be, and we all know that that's not the case, right? We have to have pullbacks. It's just a natural part of you know, assets. This is how it works. So now let me So let me go back to my crosshairs. So what I want you to really see is like we had this move. This was the low. If we look back here, we have a ladder, right? Ladder, 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 right? Okay, so there's a pattern back here. Okay. Now, I'm only speaking about this time frame. So we can't just like put everything. We can't like sell the wife, the kids, the car, and all that on this one time frame, but it does give us a lot of information. So we look back here, see what's happened, see what is the kind of trend. And I don't just mean like, oh, this is the trend, but like, what has it been doing? How's it been reacting? Right now, if I take the fib tool in the way that I use it and I measure from, this low here to this high, the most recent high there. So let's see what happens. That low, I'm just popping it over to the side so we can see kind of where it lines up right there. Right. And you see what I'm saying? These 3 points are very important. I mean, they're all 4 important, but if you're looking for a pullback, these are the 3 spots that you want to look for. Now, doesn't mean that, hey, I'm placing my trade on this, blah, blah, blah. That, I mean, you can, but it's going to depend on your leverage, position size, and so on and so forth. But you can see, and this holds true for every single time frame, just across the board. You got to know like where to pull it from, what's important, like where are the relevant levels, the highs and the lows on each time frame, to really kind of dial this in to see, all right, well, this is the really kind of important 25% or 50% or 75% mark. But if we knew this was the, good low and the good high to pull from, it comes right back to there. You can see it. I mean, it's plain as day. It hits it almost perfectly right there. The wicks a little bit there, kind of comes up and it breaks that high there, wicks it, but a little bit less than this one. Okay. So when I see this on this time frame, I'm only speaking about this time frame. This looks like this is starting to become a good spot to look for longs. Okay. Now it doesn't mean like, hey, I'm gonna set an order here at a long and I'm gonna go to 200,000. That's not how it works. It's not that easy. I wish it were, but it's not, right? But we have to build out a story for each time frame, and then we have to piece all those stories together, and then we have to look at it as like a canon, right? Like a canon of novels, of books together. Okay. So let's do exactly that. Let me what I'm gonna do is I'm gonna pop a line right here. I mean, it's not exactly perfect, but it's pretty close. Okay. I'm gonna delete the fib. Okay. And then I'm going to go to the daily. And I've been talking about this level for, I think, maybe almost 4 weeks. So if I take that same fib tool, the way I have it set up, and we come down here, we have a big, strong bounce there. This was our high, and this was our new low. I'm going to pull this from that high down to this low to see where I think this move right here is going to pull back to. Okay. So I'm going to just pull it over here so we can see it more clearly. And then, like, look how close we are. We're real close to that 50% point. And then we can also take this information over here. So we did this, we came down, we had a bounce, some, higher lows in here, or higher highs, I'm sorry, higher lows, and then higher highs regarding wicks. Anyways, same on. And then it's the same thing here, but nothing is closing over this, right? Like there's no solid information. These are signs, but they're not like, oh, it's doing this, for the most part. But we're real close to that. And this is what's called like the premium and discount. So on this side, if we're in this move down, okay, so say we're the paintbrush, say we're here and we move down like this and change that a little thicker there. So say we have this move down right here. Now from this point forward, we have a couple of points here to kind of guide us in the premium and discount range. This 50% point between the high and the low, that's going to be the decision point between our premium and discount. Okay. So if we're looking for shorts as we come down and then we start coming up and we want to take a short, which is the smarter move, in this move, then anything we buy below this 50% point under here, that's premium. We're paying a higher price than we really should. Okay. So that's why it's called premium. Like we don't care about what we're paying. We just want to get in on the short. We're FOMOing in, whatever. Okay. Now, the discount means like that's the fire sale, right? That's what it's on discount. Nobody's been buying it. We want to just gobble it up right then and there. That will be above that 50% point. So from this point up to this point, that's the discount. Now, the important and the tricky thing to remember is we have a lot of other premium and discount EQs, 25%, 75% points in play as well, because we have this high all the way down to this low. So if we like pull this all the way down to here, we also have this as an EQ. So and I think, on the daily, it could very well come up to here, right? And that'd still be the EQ, and it could dump and just continue down. Therein lies the problem. This is the difficult part in trading, and one that, I will certainly never say, I don't care if I've been trading for 100 years, I'll never say that I've figured it out 100%. But it is what's the word I'm looking for? The Holy Grail, right? Like that's the thing you want to figure out, or at least understand to the best of your ability. Everybody always asks for the secret sauce. What is the thing? What is that one thing I need to do or understand or whatever to be profitable? It's this. And this is the fractal information, and the premium and discount. Part of that understanding is the most important part. So it's like a puzzle inside of a puzzle. It's not easy, man. It's really not, but it can be utilized and figured out. It just takes time, it really does. Like I know it's not something everybody wants to hear. It's certainly not something I wanted to hear. But I promise you right now that if you start going into charts and you look at ranges in the way that I've taught them, like, I mean, a range is what? Like if you look up, it's the distance between 2 points, So we got a low, we got a high, we got a low, we got a high, a low, a high, a low, a high. These are ranges, you know what I mean? But keeping in mind, there's ranges within ranges within ranges. There's all kinds, infinite amount. There's ranges all in there, thousands of them, infinite. But what ones are important to you for the type of trade that you're planning, and the style that you have. You see what I'm saying? So the premium and discount part is freaking so important. Like it really is. It's so important. And while being accurate is awesome. I love hitting trades to the dollar on 50, 75, or 100x. It's awesome. Sometimes it's not necessary, you know. If you're a trader that has a decent account and you only need to trade 5x, right? Um, you don't need to be that accurate, and that's okay. So I think you need to adjust your expectations, and you know, everyone needs to adjust their realizations of you may be accurate this trade, but not the next one. And that's okay. That doesn't mean that you're good or great or bad or crappy or whatever, but that's just the markets. You see what I'm saying?
Yeah, that's fantastic. I mean, I can understand when you're saying the premium and the discount, the sale, you're talking about short.
Right. And it's like, it's it's not necessarily about like a type of trade to plan, you know, but it's like, when is the best time for me to look for that kind of trade that I am planning, right? Because if I take this spot we're in on the daily time frame, for example, and let me pull out my little fib tool here, and I'm gonna look at it acutely. So just recent times, right? We have this low, and then we have this high here. I'm just going to pull it over to that point there. So now I know from this low to this high, that is one. Okay. And this is halfway point, and this is, you know, the 25 and 75% point. All right. And then, like I said, we were looking at on a different time frame, but you see it lines up with this time frame as well. This is that halfway point it's bouncing off of right now. Now, does this mean that it's going to bounce here and go to the moon? No, of course not. This is one variable. And again, I reiterate, this is the hard part about trading and the part that everyone struggles with, myself included, many times. We all want that, like, well, bro, like, what do I do? You know what I mean? Like, just tell me what I need to do. Like, give me my thing, like the three things I need to do every time I enter a trade to make me money. And it's just, man, it's freaking not that simple. You know, unfortunately, there's going to be a lot of people that will kind of sell you that pipe dream. Um, and you you know, everybody is obviously more than welcome to follow them, and you know, I wish them the best of luck, but I'm just telling you, be wary of people like that. You know, be wary of those kind of people. Be wary of me, man. Be wary of everything I'm telling you. You know, everyone. Like, don't trust me. Don't trust anyone. Uh, but just understand this, and this you can take to the bank. It's not easy. It's not something you're going to learn in a few months or less than a year, and you know, be sitting at your computer with you know, 4 or 5, you know, $10,000 stacks of you know, bills laying around you and stuff, with a million followers on Instagram. That's just not how it works, you know. But hey, there's plenty of people that will sell you that kind of pipe dream, to be sure. But to jump back to what I was saying, so on the daily, we have this high and this low, and then this low, and then this high. That's that 50% point, and that's right where it's bouncing. Now let's do a little experiment here. Let's go from the previous one. Okay. So let's pull from this low to this high, but we're going to pull it over here. Okay. All right. So now it pulls up and then down, and it pushes below. And that's why I said right here, like, don't think this is the level to trade and all right, let's long it. It's not always the case. You know, this is one variable out of many. Okay. Now, this is the cool thing. What I'm going to do is, I'm trying to think of how to do this. Okay. So, what I'm going to do is I'm going to put a level here. I'm going to put it at the 50% point, and then I'm going to put another one. I'm going to put it here at the what we have is a 75% point, but you can look at it 25 or 75. It doesn't matter. It's irrelevant. All right. And then I'm going to erase this fib. Okay. I'm going to erase that. And then we're going to go down in time frames. Don't think it's going to be the 4 hour that's going to show us what I'm looking for. Let me look. Okay, perfect. Yeah, this is the one. That was the one that was confusing me. All right, so let me go back to here. Let me go to the 4 hour and look at this. I'm doing this kind of like on the fly, so I may be wrong, and if I am, I'll look like an idiot. But hey, whatever. I think this is the thing that a lot of people need to do on YouTube because it's okay to look like an idiot sometimes. All right. So now at this point, what I'm going to do is I'm going to grab this fib. I'm going to click shift and bring it over. So it's going to keep it straight. You know, it's on the same lines, but it'll just be over here. All right. So at this point, that was that level I marked, and this was that level that I marked, the 75.5 right here. Now, this was the point that I was trying to mark, right? I'm going to go back just to show you, just to illustrate. Maybe I'll put an arrow here. It might make it a little more visible. Sorry, I'm just going to put it right on it. Stupid magnet tool. I wish they'd give me they got a weak magnet and strong magnet. I wish they gave me a medium magnet. All right, so here, all right, so this was the point that I was trying to illustrate. I'm going to move it away a little bit now just to kind of make it less confusing. So I marked these two levels here and here. Okay. These were the percentage marks that I marked with the fib tool on the daily time frame. Now we're on the 4 hour. Now let's look at let me just peek at what the 1 hour looks like. Okay, go back to that one. Right. So now let's just take a look and see what the measurement is from those same percentage points here and here. And I'm going to use the same fib tool and I'm going to snap them over here, there, and I'll pull it over here, there. You see how it keeps splitting in between those? Those were the same two that it was splitting into before. You see what I'm saying? So let me take that right there. So I'm going to take it and I'm going to erase it. Okay. I'm going to erase that. Okay. Now, if we look at this on this lower time frame, because before we were on a daily, so we didn't have this much information. And then I look from this low to that high right there. All right. That's my 50% point. But what is my halfway point between that and that? You know? So let me go back to the daily and I'll show you what I'm saying. So here we are on their daily. Over here we have the 0 point between this and then this. This is the halfway point. Okay. So it comes down and it breaks between the halfway point and that 75% point that we have marked here. It's almost, it's a little beyond halfway. You can keep drilling this down. You can keep dialing in more and more accuracy. But again, you'll easily get lost in the weeds if you go too far, especially if you're, say, like a position trader. You don't need to know what it's doing on the 1 minute. It's just not necessary, right? So we only need to go as far as we need to go. I guess it's kind of the point. But the premium and discount and the 25 and the 75% points will give you so much information. And this is what I encourage you or anybody that ever watches this to do. Let's see here. So let me erase this. This is a good exercise. Go. All right. You know what? Let me open up a new one. I think this one's blank. Yes. We go to daily. Oh, daily. Okay. So I encourage you or anyone else to find these major highs and lows on a time frame. Okay. So on this one, just kind of picking a random spot, it would be like, here's a low and then here's a high right there. So I'm just going to pull it over here. All right. And then you can kind of pop lines here. All right. And then if you want to use your replay tool and you want to kind of cut it off, like say there, and then bring it over. Okay. Now you can explore and see how it reacts on each time frame to those 3 levels. These are what I call like base points. You have a starting your like base points right there, the top and the bottom. And these are the 25, 50, 75% points. Now you can see that there's a clear response. And keep in mind, this is a daily. So let's look on the 4 hour. So we're not looking at anything beyond. I'm sorry. I made a mistake there. Okay, 4 hour. There we go. Oops. Sorry. Yes. Yep, that was my mistake right there. Okay, there. Yep, that's what I meant to do. Okay. So now you can see comes down, comes up. That's what created our fib tool markings. Okay. Now, when it comes down, like you can see the levels that it's responding to in here. All right. Support comes up, bounce, it loses it. Resistance loses it. Support just above. Keep in mind, this is a 4 hour, so this is not like very acute information. Support comes up, resistance comes down, loses that, and then if you zoom in right there, you can see, resistance, all right, comes down, gains it, still resistance on the next one, and look where those candle bodies are closing, boom, 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 up, and then it closes, pull back, like I was saying earlier, when you do something, when you achieve something, you're going to have a pullback. Doesn't matter the direction. Pulls back, comes up, blasts right through it, right? Goes over that one, bounce, comes up, loses that one, and then look what it back tests on the way down. Boom, boom, right there. Comes down, blows through this one. Same thing with the candle closes. Doesn't close, doesn't close, doesn't close, doesn't close, doesn't close. Wick, 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 wick. Blows through it. You see what I'm saying? Like, these are the levels that you really need to look out for. And like I said, man, like, I'm not pretending to say like, oh yeah, this is, place your trade here on 100x and that's all you need to know. It's not, but it's a powerful piece. Very powerful piece. Does that all make sense to you?
It does. It does. And you've got this fib tool on the channel, haven't you? You've got a video explaining how you set this up.
Yes, I do. I have that in there in the YouTube channel where you can see how I have mine set up.
Yeah, it's great to see it play out. I just love it when you do the replay tool and you see it.
Yeah, the replay tool's awesome, man. Like, it's cool. It's good for confirmation, but it can also be humbling as well. Like, sometimes it doesn't always say what we want it to say. And I think that's why most YouTubers don't use it, because it kind of puts you in a vulnerable position, right? You're like, I don't want to do things on the fly. I don't want to say like, oh, I think it's going to do this in real time, but then it doesn't. And I think the biggest mistake people make in anything when trying to help teach whatever people is thinking that they have to be right all the time, and they don't. You really don't. And if you're not right, it's not gonna discredit you in any way, as long as you're honest about it and you're not like, hey, yeah, it's gonna go here because I said it's going to, or whatever. That's the mistake people make right there, is you know that assuredness, right? Like, oh, it's going to do this because I say so. Like, that's nonsense, man. It really is. It's nonsense. Anybody that says that, like, I recommend kind of tucking tail, packing your bags, and heading the other direction.
The question I have there, using that fib tool, it's finding you said base points, the top and bottom, where to
Right.
mark the fib tool. So that we need an understanding of the relevant tops and bottoms, don't we, to be able to use the fib tool correctly?
Well, I don't think that the tops and the bottoms, I don't think the term top or bottom is very relevant. What you need to really understand is starting point or end point, and it can be either. You know what I mean? Well, let me think. Let me rephrase that. So, if we're marking a swing high to a, let me think. Give me a second. Okay. So, if we're in an uptrend, all right, and we want to mark the swing low to the swing high in order to find out where that swing high pullback is going to go to towards that swing low, right? At that point, one can be our 0 or our 1. And then the halfway point will be our 0.5. And then one can be our 0.25 and one can be our 0.75. But that's not really what's important. What's important is learning where to expect or where to look where our pullback can happen and like a stop, right? So a pullback can mean one of two things. It can mean you're in a downtrend and you go up and then it rejects and you pull back, right? That's what most people think is a pullback. But a pullback can also mean you're in an uptrend, right? You're in a bull run, like this is the height of the bull run, and you just hit an all-time high, but then you pull back. You know what I mean? Like you can pull back to another level. So a pullback can mean either or. So the 25 and the 75, they don't really mean a lot. What means a lot is your starting point and your end point. So if you're in an uptrend, we want to see where that pullback is going to stop more than likely. We need other confluence, other pieces of information to kind of, compile with that to build out our plan, our strategy, our idea, right? Now, it could be the same in the other direction. Doesn't matter. The direction never matters. It doesn't. It never matters. Does that make sense?
Yeah, it's the end point that we're looking at, not the 75 or the 25.
Right. They're all important, okay? But the number doesn't matter, I guess is the way I would put it. Okay. So like the 25 and the 75 and even the 1 and the 0, it doesn't matter. What matters is the points in between. You know what I mean? Like, so from here, this low, okay, up to this high, and put over here. All right. Like this right here, this move comes down and then it comes up, right? It's right around, and keep in mind, this is a 4-hour time frame, but it's really kind of probably say a daily, at least a daily range, probably a weekly, to be honest. Yeah, that's more of a weekly. Yep, weekly range. Yep, it's right there. So the weekly move comes down. This is a low, and then it comes up, and then we'll reject off of something in here, which is essentially this, but other things in here. I would say this probably right there. Yeah, something there. So it comes down in here. Now, this point and this point are what matter to determine this point, and this point. The numbers, they don't mean anything. It just matters. It's like, all right, we came down, we came up. What are the points where I want to long or short from if we fail, right? So we're in a big downtrend, okay? I'm not looking for longs until we get past that halfway point minimally, right? But with this much kind of, movement, this much strength down, I'm not looking for longs, period, to be honest. But minimally, I'm not looking at them before this. I may start glancing at them here, and you see it. Like you can look at the candles and you can see people in the way that they think. But if you're real safe, if you're real tight with your money, you're like, I'm not looking for them until they're down here, But if you're even safer, you're like, I'm gonna wait for it to come down here and see how it responds to this, and I'm gonna go down in time frames and see how it responds down here. You see what I'm saying? There's varying degrees of security, safeness, risk management, all those things. And this is what I mean about variables. There's so many. You have to balance so many different types of traders and their intentions, their obligations, their perspectives, what they're expecting, what they're looking for. You know what I mean? And really right there, that's what makes trading so difficult, in my opinion. But like I said, it's not unmanageable. It's just you have to realize what each thing means, and you have to learn how to give each of those things the weight in which they deserve.